Welcome to the Phoenix Real Estate Market Week in Review for the week ending September 28th, 2019. My name is David Meek, Arizona Realtor and licensed Arizona real estate broker with Keller Williams Arizona Realty, and this is the Arizona Report. Well, it has been a wet week in Phoenix. Remnants of Pacific Hurricane Lorena swept over the valley, dumping over 2 inches of rain in 24 hours. That's a considerable feat for Phoenix, which is accustomed to getting only 8 inches of rain each year. But nobody has poured cold water yet on low mortgage rates this week. They are still steady, near 3-year lows, hovering right around 3.70%, according to Bankrate.com, for a 30-year fixed rate with a 3.82% APR. That's for a $300,000 owner-occupant purchase with 20% down and a 740 credit score. Your loan scenario may vary. Now, nationally, Phoenix is still holding on to the #1 spot among the largest cities in the U.S. for year-over-year residential real estate price appreciation, according to the Case-Shiller Index. In an interesting bit of news, this week I read in Michael Orr's Cromford Report, and according to Tom Ruff at the Information Market here in Phoenix, one potential red flag has emerged in the central Arizona residential housing market. Now, you might be familiar with home flipping, but that's usually in the context of existing homes, remodeling existing homes. However, buyers have recently been purchasing new construction homes to flip to future buyers. Now, one particular buyer here in the Valley recently purchased 3 new homes under construction on the same street in Chandler by Mattamy Homes and sold all homes for a $40,000 gain and about the $500,000 price point. Now, the practice of flipping new construction was common during the housing crisis because prices were appreciating so rapidly. Phoenix is one of the hottest housing markets in the country due to the lack of existing inventory, and new construction here is even more constrained due to the lack of land and labor. Now, what are the themes right now across Phoenix residential real estate? We have the low inventory between 200,000 and 500,000. Now, the market has eased recently from the red-hot summer selling pace, but activity is still brisk, and the market still favors sellers, according to the Cromford Report, to the greatest extent since 2005. Also, Maricopa County, it's growing by 200 new residents each day. 200 new residents each day in Maricopa County. Another topic, homeowners are actively refinancing to lock in lower rates as they drop. One loan officer here in Phoenix this week told me that 80% of his business is refinances, not purchases. So a lot of people are refinancing to take advantage of the interest rates, which have been on a steep downward trend since March of this year. Next topic, single-family homes for rent have done very well since 2014. Also, home prices across Phoenix, and this is probably if you take one thing away from this episode, it's this. Home prices across Phoenix have increased by 5.8% annually year over year, according to the Case-Shiller Index. Home prices in the Valley up 5.8% year over year. New home builders in Phoenix are straining to provide enough affordable housing to the market. They're held back by a lack of available qualified labor and the rising costs of land development. New home prices continue to rise due to demand, and builders can't build competitively under $250,000. In fact, I just did a quick internet search here. In the Phoenix MLS, the least expensive new construction homes for sale within a 30-mile radius of the 30-mile radius of Central Phoenix were in Western Buckeye. There was only one home advertised, one new construction home advertised under $200,000, and it was 29 miles out. It was on the western edge of Buckeye. New home buyers are driving to the edges of Greater Phoenix to find homes that they can afford. Tough to find new construction at affordable price points in Phoenix. The amount of home equity for American homeowners hit an all-time high in the second quarter of this year, according to CoreLogic's Homeowner Equity Insights report. Homeowner equity is the difference between the market value of the home and the amount that the homeowner owes to the bank. CoreLogic CEO Frank Martell said, quote, "The western half of the U.S. has experienced particularly strong gains in home equity recently," end quote. Now, in Arizona, about 3.8% of the mortgage homes here are underwater. Being underwater means owing more than the home is worth. So Arizona is in line with the national average of the number of homes underwater at 3.8%. That was certainly not the case 10 years ago. According to a recent article on CNBC, the average FICO credit score for the American consumer has reached an all-time high at 706. FICO credit scores range from 300 to 850. Generally, a credit score over 700 allows you to receive favorable loan terms, and those credit scores over 760 allow you to receive the best loan offers. Now, just 10 years ago, in October 2009, during the housing crisis, the average American FICO credit score bottomed out at 686. So new highs for American consumer credit scores, 706. That wraps the Arizona Report Week in Review for the week ending September 28th, 2019. My name is David Meek, Arizona real estate broker. If you would like to know my thoughts, more of my thoughts on the Phoenix housing market, be sure to check out my website at arizonareport.com or call me here in the studio, 480-999-MOVE. That's 480-999-6683. Thank you for joining me. Until next week, we'll see you then.